Yo, yo, what's going on YouTube? Cryptosomniacs. Let me grab the link over here and try to get this out to the world. Hopefully you guys can join me on this journey. Let me get this link out. What's up, everybody? Okay, just throw this up. Just get this out to some folks. Thank you for joining, everyone. Appreciate y'all. I really love the crypto community because it's like we're all in the same, boat, trying to make some money in this market. Some of us have taken a fair share of hits. Some people are learning how to trade, how to become better traders. I really like the fact that everyone is willing to learn and, sort of get better, and that's something that you want in the crypto market anyway, right? Or in any aspect of life, if you will. You kind of want to just get better at things and, not kind of stagnate and, sort of lose interest, right? So here we are, guys, with a big drop in crypto markets, especially Bitcoin. We had this big dumpy candle right here, and this morning I woke up and I was telling my wife, I was like, my wife and I actually talk about crypto and blockchain and Bitcoin quite a bit, and I was just telling her, I was like, I feel like this is the end of a fifth wave right here, and I'll show you guys how I map that out, but I will also show you guys, why exactly, this is the area to have taken profits, okay? And I find it funny because, majority of the traders, I think, were essentially calling to the fact that, hey, this is the, this is it. This is the end of the bear market, and boom, we're going up. It's over, right? Like that 3K, 4K area is done. We're never gonna look back on it. But, trading is all about probabilities, okay? Probabilities are something that you have to expect in a tradable market where human psychology comes into play, right? Because that there are obviously going to be cases where, people and their human errors will move the markets up or move them down, per se, okay? And that when human psychology is at work, it doesn't go so well, okay? Humans are very erratic. They're very, fearful people. And, majority of the traders, especially the new entrants in this market, are fairly new, right? They don't really have that much experience in quote-unquote trading, and they don't realize how much of the psychological effect takes place in a market like this, especially the Bitcoin and crypto markets, right? So when we see big dumpy candles like this or huge volatility, that's majority of that is done by the retailers adding fuel to the fire. The fire may have started off by say a bigger whale or a bot or something, but the person who adds fuel to the fire is really the retailers, okay? Because they're quick to panic. The smart traders know how to set off the fire, right? They know how to get people to panic. And so, we have to learn the ways of, which targets should we look for, which resistance levels should we look for, why are we looking for specific areas of resistance, and why would they break or not break, right? So let's get to it, okay? So here on the 4-hour chart, I wanted to map out the 5-wave structure that I was talking about, okay? So once we came down all the way from this 4100 high, we created a lower high into this big supply zone right here, okay? Supply zones are nothing but an area where there's a lot of sellers waiting to dump, okay? They want to get rid of their positions, and when price comes back and gravitates to that level, they just want to get rid of their position, Okay, these are called supply zones, and you can clearly see that this area between, you know, say $4,200 and down to, say, the low 4,000s, this is a big supply zone, because this is where the wicks, you know, you can see these wicks poking through, and every time Bitcoin touched it or came anywhere close to it, you know that there's a significant amount of supply just waiting to dump the price. People just want to let this shit go. They don't want to be in their position, their long positions. They would rather sell, short, and profit on the way down, because they know that this area right here holds way more supply than demand, and you know that retailers or the market is just not ready for a bigger push yet. So this is how smart traders would play this position, and this is why for the most part in this entire move right here, our community was either short or in a neutral non-trade position. Okay, we were looking at alt scalps here and there, or small, you know, jumpy moves as per this falling wedge right here, but that's really it. And then we actually did not even get into the long position until this descending trend line right here, that black line right here that comes back from November. We didn't get in till we broke out of it, because that's what you want to wait for confirmation, right? I had no idea if this bull flag was just, you know, a fake out, right? I mean, for all I know, this thing was just going to go up here, hit this resistance, and then just rip back down. This is why, you know, you need to know what you're doing in this market and trade properly with proper confirmations. And so this is what we do in the Crypto Insomniac community. Okay, so anyway, we got into this position around $3,650, $3,700, and I think we actually did not get into Bitcoin, but rather Ethereum and Litecoin, because more often than not, those two particular coins jump at a higher factor than Bitcoin when, you know, Bitcoin is playing nice, if you will. Okay, and so Ethereum and Litecoin gave us a decent amount of profits on the way up, and we loaded up on more positions around this area right here, this big bull flag that we were having. Sorry if that's a little bit unclear. I'm gonna try to make it a smaller time frame. Let's see. Okay, this bull flag that was printing out right here, so we got into some more positions right here, and we were looking to sell out, you know, at our first resistance level. Unfortunately, we didn't hit this, but we did actually reload up in this range right here, and I'm actually fairly hopeful that if this is a top, okay, and we cannot break through this resistance, I'm hoping this ABC structure plays out like this. Okay, so here's that A wave, which is going to probably, you know, be somewhere near the 618 Fibonacci. 618 meaning, you know, from the bottom of this $3,300 local bottom all the way to this, you know, like 4190 top. So that'll be the A wave. The B, I'm hoping that if it, you know, decides to create a lower high, I think it's going to kind of wick in this supply zone again, kind of like it did back here. Okay, let me show you guys one more time. Look at this wick right here. Okay, you could see it just pierce, you know, in the middle of this, the EQ of the supply area, and then just get torpedoed down, right? So I'm thinking that, you know, the ABC wave structure, which is the corrective wave structure, is going to play out something like this. I think it's going to come fairly close to this supply again. And I'm going to say probably anywhere between 4,000 and maybe 4075 is going to be the target if Bitcoin decides to create, you know, a lower high kind of like this, okay? But if it decides to show strength and it wants to, you know, say create a bull flag right near this resistance area, then I'm all for it. Okay, I'm going to double down on my position. I'm going to try to take a long trade on the way up, because whenever resistance is being played out with a bull flag like this, chances are, you know, that flag is going to break to the upside. Okay, kind of like this did right here. This was, you know, a decent amount of resistance because 4,000 was the, you know, the round number resistance, right? And then you could see the flag broke out, but then this is clearly a far more critical supply area, and then we just got torpedoed on the way down. Okay, now, you know, I wanted to show you guys, you know, something that we do in our community, which is, you know, we do daily analysis. Okay, so here's my community right here. Okay, and you know, I go live quite often. We post, you know, user requested TA. So, you know, when someone asks me a question, hey, could you look at this? I'll try to get to it as soon as I can, right? So here's gas BTC that, you know, someone asked me about, and I got to it as soon as I can. I'm pretty much in the markets at least 8 to 12 hours a day, and I enjoy trading, guys. It doesn't stress me out. If anything, it's more so like a form of relaxation for me, because I know what's happening in the markets. So yeah, so anyway, this is one of our channels. And then Bitcoin analysis, this is our other channel. This is where I put up updates on the regular. You can see every 2 or 3 hours I provide updates in this channel right here. And there's like 4 or 5 updates that I did since this morning. And I do video analysis every single morning. Every single morning. You can ask any of my community members. I like to give them a nice little morning dose of crypto, okay? And I want to let them know, what's happening in the BTC analysis, what's happening in some of our trades, and so everyone knows, hey, where we are, right? And you can see, I've done this every single day, right? I provide updates from other people too. I provide, daily morning analysis, so all kinds of stuff, okay? And then obviously we have our trade channels, and these are the trade channels. We'll give you guys a peek at some of them. In the short-term trades, we're currently stacked in BTT, LTC, some Ethereum trades, and we're looking at BAT and USDC. Okay. All right. So you guys got some trades to watch. If you're on this live stream watching. All right. Awesome. Okay, back to the analysis. So here's where I was thinking, right? Here's that ABC corrective wave structure. And this C wave is particularly important because Bitcoin actually has a history of coming back to retrace almost to the 78.6% fib. It really doesn't like the 618 Fibonacci, okay? So let me give you an example, a live example of that, okay? So say we drew a fib from this bottom right here in the middle of December to the high of this $4,100 or $4,200 area, right? And then we came down to about 3,300. Well, let's see where the fibs line up when we line that up, okay? So we go something like this and like that, and look where that lines up. Here's that $3,300 bottom right there. Let me remove some of these other fibs so you guys can see clearly, okay? Look where that lines up, okay? The $3,300 bottom and the $3,100 bottom, $4,200 top, and then the $3,300 retrace. Look at that. Almost perfection with the 786 Fibonacci level, right? So this is what I mean, guys. I would be really surprised, if Bitcoin kind of stops here in terms of its bleeding, but it's not going to drop down right away, okay? I really do think that this ABC wave structure needs to play out because there was so much bullish momentum in this area. I think there's going to be a lot of bulls buying this dip back up, okay? And, same goes for Ethereum and Litecoin. I think this, dip right here is going to get bought back up. And check this out. Here's that perfect hammer candle that you want to see, okay? The hammer candle is one that shows a large, 3 to 4 times sized wick than the body that dips down, and then the body actually closes, fairly small, okay? And then the preceding candle, right, shows a strong bullish nature, which you can already see that this one is. However, you also want to see the next 1 to 2 or 2 to 3 candles creeping up at least 50% to 70% of the way in this big bearish candle. This is when you know that you started the reverse, impulsive move on the way up, okay? So this B wave move right here, you can see if it stops right around this area, it'll be almost 70 to 80% of the way of this entire, red bearish candle. And that's where this is going to be really critical, guys. If we start seeing wicks hitting this area just below, this green box, it's time to get out of your positions, okay? Because this thing is going to get torpedoed down again. So it's better that you wait for a better setup. Maybe even buy up that, 786 Fibonacci level, like I told you about. And then you can load up some more on your BTC, ETH, or LTC positions. I like those specifically because I like to stay on Coinbase, guys. I'm really just tired of, the shenanigans of BitMEX and Binance, whenever the exchange gets busy, it freezes up, all kinds of garbage shit, right? I really don't like it. It really takes away from the credibility of the crypto space, okay? Especially if you're trying to be a good trader, when you're not the one who's doing the fuckery, right? Like, I'm not going around starting up thousands of bots or flooding the crypto exchanges with bad data or thousands of orders, right? I'm not panicking the network. I'm just a smart trader trying to do the best that he can, but I can't do my job if there's shitty bots out there who are gonna mess up everything for me. So it's best that I stay on Coinbase Exchange, exchanges like Kraken, Gemini, and that's where I feel like there's no bot fuckery. Excuse my language. So anyway, so you could see that the 786 Fibonacci, guys, it lines up pretty much right near the top of the descending trend line that we've held for so long, right? That we had from way back here. Let me kind of squeeze this down lower. You could see that this line right here, this black line, and if it matches up to that 786 Fibonacci after we get past that B wave, then I would look for this area. But I'm not saying that's gonna happen. I'm saying that this area is a big supply zone, guys. Supply like this is not just eaten up in one go. I mean, unless there's like a huge buyer, bots are ready to just push this market forward. Big supply zones like this are not eaten up on the first go. So I'm really not surprised that we had a big, torpedo-sized candle like this once we hit a critical level that I had mocked up literally days before we even hit this level. Okay? All right. Let's check out some questions that we have in the channel. Back to 3.9K, Julian Martinez. Yeah, so Julian, I mean, obviously, if you've been watching this analysis for this long, I think 3.8K or 3.7 to 3.8 is a pretty strong support, and I'll show you guys, why in a second. But if that breaks, then obviously look out for the 786 Fibonacci. But like I said, right, I still expect this ABC wave to play out, okay? So, one thing to know about the average crypto retailer is, they don't sell right here, okay? They'll sell down here, right? I mean, come on, like, let's be real. Majority of the people that that you chat with, in the silly Discord channels, I mean, that, they're like, okay, hey, this thing's gonna crash, go back down to 1,000 right away. One thing that they don't realize is things don't just always go straight down or straight up, okay? That's not how trading works, and that's not how life works either, okay? If it happens, yeah, that's fine, but those are like one-off occasions, guys. You have to look out for, some critical support areas. You have to look out for, the bullish pressure, the demand sentiment, the the other support and resistance levels nearby, and then you can make a better informed decision of your trades, when to get in and when to get out. Do you recognize some kind of Wyckoff accumulation? Nick Nolte. Yes, that's a fantastic question, man. Here's the this is my chart that I had mocked up. If you go to the Cryptosomniac trading view right here, I mocked this up, the accumulation schematic. And this is how I see it playing out, okay, if it does, right? And again, I still do think that this is a possibility. Like I said, trading is all about, probabilities and possibilities. I'm not saying this is going to happen 100%, but if it does, this is how I see it happening. And you could see that, I drew this out, I think middle of December or something, and it's playing out decently. It's not perfect. Doesn't need to be perfect, but you could see how it's playing out fairly decently, okay? And I've explained everything in this schematic right here. If you want to go read, please go check it out on TradingView. Type in Cryptosomniac and the Wyckoff schematic, okay? So go check this out if you want to learn how Wyckoff accumulation works. All right. So another thing that I wanted to mention is we have other channels too, guys. I have this Forex channel that, I often, try to look in and see if I can find any trades. I found this New Zealand US dollar trade, which, is looking like a bull pennant or a symmetrical triangle. So if you're into, Forex, check this out. The VPVR shows, you know, not too much resistance on the way up. So I'm thinking that this thing's going to break to the upside. So I'm going to go check out my Forex account and see if I can get into a nice trade on this and a nice buy around the bottom of this symmetrical triangle. All right. So that's, you know, another thing that we offer in the community. We talk about fundamentals. We have like a free chat too. You know, if you guys just want to pop in, you know, you can do that. We have a margin trading channel. I already showed you guys we have a user request. You know, if you have any questions on certain coins that you have a question on, I'll be happy to take a look at it and provide you my analysis. Back to the charts. So this is the chart that I had mocked up, and I think you may have seen this in the one of the channels that I showed you. Okay, I kept it fairly clean because there's not a whole lot to show, right? So here's the thing, okay? The reason we're bouncing off at this particular area with this wick is because there was this, you know, lopsided inverse head and shoulders pattern right here that was created, you know, beginning of January to the, you know, beginning of February, okay? And once this got broken, you could see that it didn't get retested, you know, anytime soon until we just got torpedoed today, right? So you could see why we're coming back to this particular area, right? So if you know, again, guys, you have to understand why things like this matter. You know, you have to be able to read charts and know that, okay, you know, why should I be letting go of my position here? Well, it doesn't make any sense if you do, right? Because you're literally sitting on support. Why would you sell support? You're supposed to buy up support. You're supposed to sell resistance, right? As we should have right here. This was the 41.14 marker that I had drawn up. Again, the same thing that I showed you on this chart right here, okay? This is all a big supply zone right here, okay? You know, see these wicks that are poking through? All supply right here, right? All supply. And you can see once we hit the middle of the supply, we couldn't close above this 41.14 candle, or this resistance. And you can see, then we got dumped. Okay, so if you knew how to trade technicals, you'd be out of this position and then you'd be waiting for a better setup. Because you sell resistance and you buy support, right? Just etch that into your mind. Sell resistance, buy support, and you'll be golden, okay? Another reason why, you know, I was fairly skeptical that this thing would go any higher right away was this 5-wave count right here. Now, I'm not a big fan of Elliott waves, you know, kind of like that, and this will be your 5th wave, ending 5th wave right there, okay? So the 5-wave structure right here is already completed, okay, of this particular impulsive move. But remember that Elliott waves don't just, you know, come in one particular area. They can be applied in many areas. So for example, okay, so if you are looking at Elliott waves right now, here's something that you can mock up too. This could be your wave 1, okay, this is your wave 2 right here. Here's this one just piercing past the 1 wave right here. And then the 4th one, we said it might come back down to 3,700. So let's drop it right there. And then the 5th one could actually poke up even higher and get up to 4,400 or maybe even 5,000. Okay, so you can see how this Elliott wave is still at play in the larger scheme. Okay, and you know, the 5th wave of our current small move right here, our local move, is over. And now we're technically in that ABC correction that I spoke about earlier, kind of like this. Here's that A finishing right now. B might come up to 4,000 to maybe, you know, 4,075, and then the C might come back down to $4,700 or $4,600 at most. Okay. All right. Do you recognize? Okay, you already asked that question about Wyckoff. All right, I'm gonna get back to this. One thing that I did want to point out, guys, check out this, you know, Skew Markets Twitter page. It's really a fantastic guide. I've been going through this person's material, and you know, clearly there's a lot of due diligence done. This person knows what he or she is talking about. So I'm really happy with, you know, being able to look at their charts and start utilizing some of their numbers. So for example, you know, last Friday, this was really interesting. Okay, so the Deribit exchange is a options, you know, platform. Okay, so you can open up options for, you know, calls and puts if you're familiar with that on a specific date to close, right? So you could see there was a lot of open interest on 37.50 it seems as a strike, and price obviously exceeded that, because when price actually exceeds that, you have a higher chance of making more money. Okay, especially when the expiration is Friday, right? And I think Friday, which was 2 days ago, let's see where price hit. It hit literally 4,100, the highest it could hit. And then after people take profits up here, they close their options positions, and then boom, market just heads down, right? So this is where that options contracts have a decent amount of impact on the market, even the CME futures. Okay, if you go check out my YouTube video, you'll see how I mocked up a video about how I believe that CME futures and the traders in the crypto and Bitcoin space, especially on BitMEX, have a lot of how would you call it, collusion being created by both these. And I truly believe that, because you could see if you go back to my video, you could see a lot of dates lining up with the CME futures closing and the market moving to one side or the other, where the CME contracts are being opened or closed. And you can actually check out this stuff on COT data. COT stands for Commitment of Traders Reports, and you just type in Bitcoin right here on the CFTC website, and you can see positions as of February 5th. Okay, still largely short, right? But again, we're about 19 days past February 5th. So who knows? I mean, once February 9th or 10th started kicking in, we started to see the market go from 3,300 to 4,000. So these positions, these open interest positions, could have actually switched. But I don't get the COT reports, because the goddamn government shutdown impacted this, and we're so late on these COT reports that I'm basically trading blind in these positions, and it's really unfair to the average retailer like you or I. Right? Because we have no idea where the smart money and the big money and how they're positioned. In the CryptoSomnia community, I read this data for you, and I explain to our community, how the contracts are doing. And once those are updated, I could actually give you, with a good confidence that, hey, these people are either going short or long. Unfortunately, the government shutdown happened, and these people were affected by it, and so they're not able to catch up with their work and provide good updated data. So we're basically trading in the blind, not even knowing where CME futures and how they're positioned. So it really sucks to be in a position where you have no idea where the smart money is trying to take this market. So until the next COT report, I mean, I'm gonna have to kind of wait and see what the heck was going on in this entire 20-day move, because the CME futures actually were expiring February 26th. Okay, and remember, when positions are expiring on a certain date, that doesn't mean that traders close their positions then. They actually close them well before the expiration date, and then they roll over into the next position because they want to exploit the next structure. Because once the move has been completed to the upside, I mean, you don't want to be stuck in the same expiration position, right? You want to, see what the March position has in place. Then the March position may actually, very well open up an opportunity to go short, okay? So that's how you kind of read COT data, and positioning and structure as per, what the CME is doing, what the CBOE is doing, etc. Okay? Cryptic Nation, BTC is going to $2,700 or lower. The crypto market has no new money coming in. This last pump is just recycled money. I disagree. I think, when it comes to the crypto markets, guys, it doesn't take a lot of money to push this market up. Okay, I'm not even kidding. Like, you put in, say, $500,000 of, market buying, and you will see this prices skyrocket, maybe like $200-300. So it doesn't really take a lot of money. It just takes, one or two or a couple of smart traders knowing which, structure to exploit, which way has the most, upside or downside, and you just exploit it. And that's it. You make money on the way up, and then you make money on the way down too, right? So that's how I see this. But I will agree with you on one thing, Cryptic Nation, is that I do, in the medium term, I do see this market actually, coming back down to at least the $1,500 to say, $2,500 level, okay? And I've talked about this before on many videos. Excuse me, because this move right here that we're looking at right now, when we look at the reverse Fibonacci retrace from the drop that we had in November from $6,500 all the way down to $3,100, you can see that we never even made it back up to the 382 fib, nor did we make it back up to the 50 fib, nor the 618 Fibonacci fib. Okay, and this is something that we've done actually quite a bit historically for the last 14 months in Bitcoin. Let me show you guys. Okay, it's not the right chart. Maybe it's over here. I have so many charts, it's like really hard for me to keep track of where is what. Let's see. I think this is it. Yeah, there we go. So remember I spoke about this, in my video last time, is that, when we see the drop from 19,000 to 6,000, the reverse fib took us to just 382 Fibonacci at 11.7. And went from 11.7 down to 6,400, and the reverse fib again took us to 618. Okay, same thing again, took us to 618 when we came back from 5,700 to 10K, right? Or I'm sorry, 5,700 to 8.5, and then we went from 8.5 to about 5,800, and then we went to 618 fib again. So if we were to hold up that same rule, right? So going back to my chart, okay, where is it? This chart right here, right? So you could see that when we drop from $6,500 down to $3,100, you should at least try to make it back up to $4,400, which is, the 382 fib that we had back there, right? But we didn't even make it that far, right? At least not yet. So once we do, I think, around this region, I think this is going to be that big bull trap, okay? And this is how I see this, playing out, okay? So here's that one wave, right? 2, 3s finishing off right there. We're gonna have, 4 wave like right down here. 5th wave is gonna come anywhere between this 618 fib and the 50 Fibonacci. So say like right in the middle. Let's just say, right below it, okay? And then I think we're gonna get shot down to, getting everybody liquidated in this market, because everyone's gonna think that, oh, we're in 5K range. All right, we're ready to go. We're ready for the new bull market. We're basically ready for the next bull run. And that's where you get people trapped. And then you just dump the market and dump it harder and harder. And that's where people just give up. And this is why I still believe that we still require a mass capitulation and a mass exodus of the crypto space. Because, 95% of the crypto coins, guys, let's be real, okay? They are fucking useless. There's no way that there's 2,000 or 4,000 different projects that all have a use case. There's maybe, 1% of those, which is anywhere between 20 to 40 projects, if you're counting that there's 4,000 crypto projects, right? That maybe have a use case and that may accrue more value going into the next 2, 4, 5 years, right? So this is what I mean, like this is why I still look for that capitulation. And that capitulation will probably go after this, bull trap when we get up to 4,500, 5,000, and then rip back down. Okay. Yeah, please hit the like button, guys. I would love that. Thank you, Cryptic Nation. I really appreciate it. So silky smooth, too many moon and nice still around. Oh my god, that's a fantastic word, by the way. I've never heard that word before, but shit, kudos to you, man. Cryptic Nation says, can you look at the crypto total market cap chart on TradingView? It's looking bearish. Oh yeah, I totally agree. I've taken a look at that chart many times. It is absolutely bearish. Like, I actually, you guys should check out this research firm right here. It's a investment fund, but they actually put out a research paper. Okay, it's fantastic, guys. I read through this twice already. Ah, shit. I guess they require subscribers now, but I swear it was like free before. Oh, there it is. Yeah. So State of Bitcoin. Okay, you guys should please check this out. It has a lot of information. I'm not shilling anyone, but please check out this research paper. And you'll see a lot of reasons why this market is going to bottom out at a particular market cap that they mention. And you also see some of the use cases, some of the reasons, in terms of fundamentals, network values, all kinds. Yeah, they analyze UTXO cycles, and so you'll get to see, why this market still has potentially more downside, and then where it may bottom out at, and what the future holds. Okay, so please check out Delphi Digital. In no way, shape, or form am I affiliated with them. I just like to appreciate good work when I see it, and I think this was fantastic work by them, so really kudos to them. Please go check out their work, okay? If you're part of the Cryptosomnia community, I wrote up my own paper on exactly where I see the market going, and I wrote up this paper for my Advantage members where is it? My own predictive modeling paper right here. Okay, so you can check this out on your own volition. And then I also have a Cryptosomniac course for the Advantage members as well as the community. So you can go to cryptosomniac.com and you'll see our course, or my course rather, on the website right here. Okay, so if we go to Cryptosomniac and then you hit on products, you'll see it right here, guys. If you want to learn technical analysis, market psychology, please go check out my course. It's only $10. By the way, I kid you not, I put in at least 8 to 10 hours of work in this. So basically you're paying me $1 an hour for my work, okay? And I promise you, you will not be disappointed. There's a lot of informative material, and this is only part 1 of a 3-series lecture. So you're paying, $9 for the first part, and there's at least 4 or 5 videos containing about 3 to 5 hours of work in there. So please go check this out. And then our Advantage subscription right here too, $97 a month, but we've already had at least 5 to 7 trades that have yielded us anywhere between 0.7% or all the way to 3 to 5%. Okay, and that easily covers your Advantage fee, guys. I can't do this for free, right? You guys understand, this is a tough space, right? And so, we put out our trade calls, we put out all the material as best we can. And I also talk to you guys about, some of the long-term things that I'm holding onto, right? NAS, which is Nebulous, Ethereum, XLM, Nexo, Moss. I'm not afraid to tell you guys what I'm into because I know that I've done my due diligence. It's up to you if you want to take pull the trigger, if you will. Hey, what's your background? Julian Martinez asked. So Julian, I've actually explained this before. I've been trading for about 10 to 11 years now. I started off in about 2008 or 9, right near the financial crisis. My dad had a trading account on TD Ameritrade. Back then, I think it was called TD Bank North. We used to live way in the northeast part of the country. And I logged onto his account without his consent, and I started trading on his account, and I thought I was hot shit, and I was making some good money. But then after that, the financial crisis really took full swing, and I lost a bunch of money from my dad, and I felt really horrible. And then after that, it was a long series of years of just learning and understanding what's happening, and so here I am now. So hopefully none of you guys do that, and hopefully you pay attention to what's happening in this market the way I do, which is patiently and trying to understand when to take proper entries and when to take proper exits. So yeah, with that being said, I'm pretty much coming to the end of this stream, guys. Like I said, watch out for this market to make this sort of ABC corrective wave structure. Okay, here's that A wave coming down here. B wave, if it creates a lower high, it'll be somewhere around 4,000 or 4,075. And then C wave will probably be anywhere between $3,600 to $3,700. And then after that, we'll take again another 5 wave impulse if this is over. Okay. One thing I wanted to show you guys real quick. Okay. Let me go back to this chart right here. All right. So this is the BLX chart. This actually has all the data for the last 10 plus years of Bitcoin. Actually, maybe it's this chart right here that I have it on. Yeah, there we go. Oh yeah, perfect. This is the chart right here. Here's my BLX chart. This contains all the data of Bitcoin's entire history. And something interesting that I like to look at is the 200 weekly moving average. Okay, because in the last bull run that we had in 2015 and 16, you could see this green line, right? Let me hide all this stuff. You can see this green line, which is the 200 weekly moving average, being tapped multiple times and being used as support. Even though these wicks bled through, the candles always, happen to close above this 200 weekly moving average. And we had this accumulation phase from January all the way into October, November. And then we started moving up, and you could see how we're actually hitting that again, right? In the same fashion. Okay, we're seeing nice bounces off the 200 moving average, and we could say that if this $3,000 to $4,000 range sticks for the next say 8, 10, 12 months, this could actually be accumulation, sort of like this. Okay. But unfortunately, I'm a little bit more on the bearish side on the weekly charts because, one thing that I mentioned earlier is I didn't like the fact that we couldn't even bounce back up to the 618 Fibonacci when we look at the reverse retrace, right? So let me show you guys what I mean, okay? So when this drop happened in 2015, you could see, it went from a high of, $386 all the way down to a low of 165 or something, okay? And you could see that the price came up to the 50 Fibonacci level. Let me zoom into this thing. I don't know if you guys can see this properly. Okay, so you could see this in 2015, right? Price went from a high of 390 all the way down to a low of 170 or 160 something, and then you could see how it reversed back over the next several weeks to the 618 Fibonacci, and then got rejected again. And it came back up to the 618 Fibonacci months later and got rejected again. This is why the 618 Fibonacci level on the reverse is so important, okay? And this is not something that we could do in Bitcoin at present moment, right? Like I showed you guys earlier, when we had the drop from about $6,500, we went to a low of 3,100. Let me take this off right here. You could see that we barely even made it up to 382 Fibonacci. So you could see why this bounce is pitiful, right? And this is why I'm not a big fan of, the 200-week moving average holding us up so soon. Because eventually, if we keep hammering away at this 200 moving average, it's going to get weaker and weaker, guys. All the bulls sitting in this area right here, they're going to get exhausted and depleted. And this thing is just going to break. And it's going to break really hard and really ugly, because it's going to go back down to probably this level right here that I've mocked up, okay? Which is, that $1,200 to $1,900 gap that I still want to be filled, okay? Gaps are something that are recorded in most traded markets, because there's a price movement that happens where, the support and resistance level is not tested when it's broken. So for example, if price keeps hitting this resistance right here, right? Eventually it's going to break up through. But usually you want the same level to be tested as support, right? And then you want it to move back up. This ensures that this is not like a glass floor that's just going to break right through. This makes the stronger, bulls waiting at that area, and they will buy up all the assets, whatever that's being dumped, and they'll pick up the market to new higher highs. Okay, and this is why I see this gap needing to be closed in a similar fashion. Okay, I need this area to be tested as support to ensure that the bulls and the people holding the bitcoins right here are not going to dump and make this market collapse. Okay, so that's where my final target ends. Okay, Could you take a look at ontology? Yeah, for sure. Let's take a look at that. And after that, guys, I'm going to wrap this up. Let's take a look at ontology. I mean, ontology clearly looks like it's taking off. It is actually flying above the 200-day moving average. Definitely a good sign. Let's see where it's coming up to right now, though. Yeah, I mean, it's hitting that critical resistance level. Resistance is something like this, right? You kind of try to draw it up, something like that, because this area right here was once support, right? So you could see the candles hitting this and bouncing back up. Candles hit it, bounce it back up. Candles hit it, bounce it back up. Multiple times candles stay there, try to bounce back up, and then just rip right through, okay? So now this area is becoming resistance. I would actually not even take a trade on this until I see some candles closing above this level. So maybe like 2,700 Satoshis right here. That's where I'd actually get interested in ontology. Until then, this could actually be, the end of the impulsive wave, and this thing could just reverse down. And you do not want to be caught at the high because the floor is much deeper, right? All right. That's pretty much it, guys. I went over the CFTC or COT data for the CME futures. I told you guys to go check out Delphi Digital, their research paper on Bitcoin. It's UTXO analysis, its use case. I told you guys about my technicals educational course on the Cryptosomniac website. Please go check it out if you're interested in learning technicals. I told you guys about the Advantage program, yeah, skew as well. This guy has really great derivative information, options information, and he or she posts up great charts. So yeah, please give this person a thumbs up. And then that is pretty much it, guys. Please come join our channel. We do fantastic work. Like I said, daily Bitcoin analysis every single day. Video analysis. It's about 10 minutes long, and then I post up updates every couple hours, right? 10 a.m., 1 p.m., right there, and then 2 p.m. So you could see I post many updates to keep my community informed. Okay, awesome, guys. Thank you so much. Much love, and I will see you guys hopefully in the Cryptosomniac Moon Lounge. All right, cheers.